view is that gold is it's had a tremendous run over the years, and for various reasons. I think there's a couple key drivers here. The central bank buying overseas is obviously a huge thing. Central banks around the world have been holding dollar assets as collateral as within their reserve currencies, and I guess particularly in 2008 we saw a lot of guys moving out of US dollar. China was obviously the big one, and they're looking at other assets to put in reserve, and that has been hugely supportive for gold. And I guess, not at a central bank level, if you look at portfolio management level, a lot of guys in 2008 realized exactly how valuable it was to have gold within the portfolio, because when everything else was falling through the floor, equities, some of the other commodities that are more linked to the economic cycle, they were all falling through the floor, and gold actually held up pretty well. So I think gold has really received a lot of attention since 2008, and I expect it to continue. And I guess purely on the supply side as well, gold is getting more and more expensive to mine. We used to be, as South Africa, we used to be the largest gold producer in the world, and I think at the moment we're number 3. And we're seeing it even in our mining businesses that it's getting more and more expensive to actually mine that material. So I think from a supply side, we have certain constraints there. The marginal cost of production across South Africa, you're looking at around anywhere between $1,100 and $1,200 an ounce. And with diesel prices going with AI and everything else, pushing up the cost of actually mining this stuff, it does bode for a very, very supportive environment for gold going forward. Things that I haven't mentioned is obviously gold is hugely driven by geopolitical risk, and with concerns around the world, we've got tensions in Iran and the US. Guys get a little bit skeptical about holding paper currency and prefer to hold real assets.